Good morning all and welcome to today's video. So today I have four pairs on watch. Those are pound Swiss, Kiwi dollar, pound dollar and euro dollar. So it's pretty much all about the dollar today with the exception of pound Swiss. So I'm going to break these pairs down for you now, give you my thought process and tell you what I'll be looking for. So on the daily chart on pound Swiss, as I mentioned yesterday, if you were watching yesterday's video, we had this move up here. We had this sharp move down, followed by a sharp move up, giving me a clue that this is where the liquidity was sat and that price would likely eventually find its way back down to this area for that longer term move to the upside. What do we have? Price comes down, it moves up, doesn't quite tap into this area. It comes down again. We get that second touch of these three touch structures, which we typically see. We then get this middle section within it. So after the second touch, we often see these. We get this 1, 2, 3 wave move, giving me a clue that that is a completed middle section. And then we come down for that third touch. And typically speaking, what we see is that on the higher time frames, price will break below a sharp area of value or any standout area of value before rallying to the upside. Many people believe what was previously support becomes resistance. Once we break below, the media gets hold of the narrative and says things like pound Swiss at 1 year low. And people that don't know what they're doing and people that are trying to get rich quick think that means price is just going to keep going. It's just going to keep going down and down and down, particularly if they believe what was previously support becomes resistance once it's broken below. So they start selling. And unless there's been some kind of structural unless there's been some kind of structural change, which we can usually see on the lower time frames and sometimes on the higher time frames, then this just represents, if we break just below, a bargain area of value for a buy. I often think of this in terms of like the housing market, for example. If you're looking to buy a house in a particular area or on a particular street that you've been looking at for some time, if price suddenly becomes lower on that street or in that area than it's been for some time, then that is a bargain area. That is a bargain price for you to buy. Okay, when I watch these property programs, I've noticed how when they're talking about when I watch these property programs where there's houses for sale, for example, in Spain, when people are looking for properties in Spain, they often say that a lot of those properties in the particular area where they're looking to show someone around were bought up in 2008 by wealthy investors. So they often say that wealthy investors came along and bought up a lot of properties in 2008. Why do they say this? Well, that was the start of the global recession. Many people would have had to sell their properties fast due to financial problems. So, of course, the wealthy people step in and buy those properties at a discounted value. And this is a discounted value, okay? You can see now that we have that confirmed morning star formation. We break below. There's a bit of a stall in price, slightly bullish candle, and then a daily candle which closes above the body of this previous candle and retraces 50% of the length of the body of the previous candle. So we've got that kind of, it's not a morning star as such, but it's got that morning star feel about it. Okay, it's the same mechanics. We also have, just to touch on it, we have this impulse correction continuation. We've completed that move. If we just measure it from the impulse, or even if you measure it from there, we've fulfilled pretty much all of that value, giving me a clue that this all of that move, giving me a clue that this is a completed structure. And what do you know, we're back above the low again, which is what I was anticipating. As I said, we don't know what's going to happen, but in terms of structure, I never know what's going to happen, but in terms of structure and the mechanics of the market, this is about as clear, one of the clearest structures I've seen for a move to the upside, particularly when we have a near miss to this area. So I've talked about when we have these near misses to an area, that's another indication that we will likely take out this near miss and the high that we failed to tap into last time around. And on the flip side, we had a near miss here to here, which gave me a clue, especially when we had this 1, 2, 3 wave middle section, that we would likely come back down to here as well. So the mechanics of the market playing out as they usually do. And so if I just drill up, is that even a phrase? If I just drill up, you can see that the price is starting to correct, and we haven't had a flag as such that I've been able to get involved in, probably because I've been asleep. That's probably got a lot to do with it. But what I'll be looking for today is the following. So with all that being said, if we get a flag such as this one, I have set an alert here just to see if the reason I've set an alert, if you just look at it, so I've set an alert there just to see if we come back down to test this low, because what do we have? We have a sharp move down followed by a sharp move up. This may act as the base, which is why yesterday morning, before we'd even broken above, I had my flag drawn as such, because often price will come back down to retest the area that it just broke above, and then we end up with that. We end up with a sharp move like that, which just so happens to be the area of value which price broke above. So I've seen that so many times. That's why I drew my flag as such. But, we don't quite know. We may flag, this may act as the base. So what I've done here is I've set an alert just above here, and I've also set a Google Calendar reminder to remind me to check this pair in an hour's time, just to see how it's looking, just to see if we've got a structured flag that I can get involved with. And if we do get a flag, I will be looking that I can see the structure of, then I'll be looking to get long on the break of the flag or within it. If we've got the two tops, I've drawn three, but if we get the two tops and we push down, we break the low, then I'll be looking to get long either with a risk entry within the flag or a reduced risk entry on the break, and then I will be able to manage this easily, most likely up to the first inflection point for something in the region of 2%. So that is pound Swiss, nice and simple one there. I'm just going to get rid of this path tool there. So Kiwi dollar on the higher time frames, we have, so this is if I just go on the weekly, that's probably better. So we have this sharp move up followed by a sharp move down. Okay, what do we have? We have a near miss to this low here, which means that price will at some point likely take out this low to fulfill this low which it near missed last time around. We push up to this area of value. I am mindful of the fact that we've also near missed to here. That is partly why this is lower down on my list. So by lower down on my list, I mean I create my lists in terms of if all these pairs were to shape up with an entry at the same time. That's very, very rare. Sometimes you get two at the same time, but it's important to know which is your preferred pair. So if all these pairs shaped up at the same time, I would take pound Swiss over Kiwi dollar, partly because price near missed to here. But if we just drill down, we also have, if we just examine this, okay, so we have this first touch, we near missed to that high. We have a, paintbrush tool, something seriously wrong with that at the moment. We have this 1, 2, 3 middle section, price pushes up. Notice it near misses it again, not by much, but it near misses again, okay? And often that means that this is an incomplete piece of structure because it didn't fill the highs. So what does that mean? We then get a 1, 2, 3 after the near miss. Then we push up and then we break the high and then we push down, giving me a clue that this is a completed piece of structure because we have that 1, 2, 3, but also a 1, 2, 3 middle section within it, which is when we push down. So just trying to pay closer attention to the middle sections, which seem to hold the key to a lot of these setups that we look for. Okay, we then push below, we break below this low here, giving me a clue that there was not enough liquidity here to send price back to the upside, most likely because it was a completed piece of structure that was sat above. Okay, then if I drill down, you can see we also have, if I just zoom in, we have that 1, 2, 3. We also have that middle section. So we have this paintbrush tool. I don't know what's wrong with it. Right, we have that 1, 2, 3 middle section. Price pushes up, breaks the high, pushes down. In this case, we get this kind of scoop double top, which we sometimes see where price comes back up, scoop, takes out the high again, and then drops. Sometimes we see that. Right, if I just get rid of this paint, I can't get rid of it now. Then what happens is we break below this low and we correct below it, giving me a clue that there's not enough liquidity here to send price to the upside, okay? And if we drill down, most likely because this is a completed piece of structure, once again, if I just drill down, what we also have on the 1 hour chart is we have this, in this instance, it's kind of it may end up being a 3-touch or 3-section flag. I shall touch on that in a minute. But we have this kind of impulse correction continuation. Okay, within this potential impulse correction continuation, and inside all of that, we have a middle section. We have the impulse correction continuation, which breaks the low of the correction, giving a clue that this is a completed middle section. Now, there is one thing to be mindful of for this. We do have a sharp move up followed by a sharp move down. So price may tap into this area. I've got this as my area of value, but partly because this sharp move formed above the low of the previous structure. Okay, so when the hook point forms above the low of the previous structure, sometimes it's the case that we don't have to push up to this area before pushing to the downside. Okay, which is why I've got my area of value here. Also, if we just take the Fibonacci tool and measure the impulse, okay, if we were to push up to this area, we would be pushing up to kind of, what is a 60% retrace. And if we measure it down to there, that would be a 60% retrace of this move from here to here, or to here rather, which is not as common. Usually kind of the line in the sand, unless we're trading a more corrective pair, is the 50% mark, which would be more in the region of here. Okay, so that's another reason why price doesn't necessarily have to come all the way up here. However, bearing in mind that this forecast was done last night, if you just look at what's happening now, this does bear some resemblance to a little bit of an ending structure. So where this may be the middle section, which pushes up to that sharp hook point for the move up, for the move to the downside, which may just tap into that area there. Okay, and then we kind of have that, this little ending structure here. That may happen as well. But regardless, what I'll be looking for as a minimum, with all this being said, so I'm satisfied now that near miss that I talked about on the high time frames doesn't necessarily need to be filled straight away, because we're correcting below the lows of previous structures, right? So what I'll be looking for is the following. Because the sequence on the way down hasn't been the greatest with this pair, and because we may trickle up to this high as well, this sharp hook point there, what I'll be looking for is price to tap above here. It may also tap into this area as well, this sharp hook point. If it does, great, because that means we will have washed out the liquidity that was sat here and the liquidity that was sat here, which means we've washed out more liquidity than if we just tap into this area. But as a minimum, I'll be looking for price to tap into this area. You can see we have a bullish wick. We have a bullish candle there with a green wick above it. Often these get filled, especially when they kind of near miss an area of value. If we tap into that area, we get the push down on the flag, then I'll look to get short on the break of the flag or within it, and then I'll be able to manage it down to these lows, just in case price develop something larger, a larger structure. And you could see there would be about 5% on the cards there. So that is Kiwi dollar. Kiwi dollar speeding up ever so slightly. I have pound dollar on watch. Now, on the higher time frames, as I touched on yesterday, we kind of have this one. We have this. It's doing it again. Right, we have this 1, 2, 3 move there. We have this completed middle section, giving me a clue that this is a potentially completed structure for a move to the upside to take out this near miss, which just failed to tap into that high there. However, there may be a little short-term move on to the downside. You can see that we have this 1, 2, 3 move there. So price doesn't necessarily need to come all the way down to there, but also notice that there is a sharp hook point there, which we may tap into before price moves to the upside, which is kind of congruent with what the DXY, the dollar index, is doing at the moment. Okay, so we tap into this area. We have this 1, 2, 3 touch structure with this middle section, which is slightly more clear on the 1 hour chart. We tap into, if I just drill down, we tap into, we have this 1, 2, 3 middle section within this 1, 2, 3. Bit of a subjective first touch, but that's not really relevant. It's just the mechanics of the market. We have that 1, 2, 3 wave move. We tap into this sharp hook point, which price sold off aggressively from last time around. We then push down, and now we have this piece of structure here. We've broken out of it, but we may break back in to take out that sharp hook point there, which price failed to tap into last time around. Okay, so with all that being said, and one of the reasons I meant to touch on that in yesterday's video, but I kind of forgot. I can't factor in everything. This 20 minutes is often not enough time for me to factor in everything I've learned. learn to see. One of the reasons I thought we may break out of this structure, normally on the lower time frames, we don't move too far from the hook point if we're going to move to the downside. But one of the reasons I thought we might do in this instance is if we just measure the volume that's built up within this kind of middle section here. Okay, let's just do that a bit more accurately. So actually, that's not accurate at all, is it? Okay, right. So if we just measure this section here that price was ranging within, and then we measure the height. So from the height, by the height, I mean kind of from the base of it here to the top of it. And then we assume that the move out is often of a similar length to the height of the middle section itself. That kind of takes us up to here where price is currently sat. So the volume that was built in here can sometimes, depending on how voluminous it is, cause price to break out by a similar length to how high the middle section was, if that makes sense. So if this didn't have as much volume in it, it was likely that we would just tap into this area and then push to the downside, versus if there's a lot of volume that's built up, price will sometimes push higher before breaking back in because of how many people and how much volume there was in this range, if that makes sense. Okay, so with all that being said, if price breaks back in, of course, if it keeps moving to the downside, I would take this off of watch. But if we suddenly break to the downside, we could do, because there's a lot of economic data coming out of the UK and the European Union very shortly this morning, which may act as the catalyst for price to break back below this area of value and flag. And if it does, I'll be looking to get short on the break of the flag or within it. And I have an alert set just above the area of value to see if we push down. If we just keep pushing up, I'm going to take this off of watch, because there would be nothing that I'd be interested in by the end of the day if that was to occur. So that is pound dollar. Moving on, it's a similar picture with euro dollar. If I just drill down, you can see that once again, just as with pound dollar, we tapped into this last exchange of liquidity. Price came down, it kind of near missed to this area to some degree. And then we have that kind of 1, 2, 3 section, which taps into that last exchange of liquidity and then rallies to the upside. Okay. We then have this, we're now at the 90% rule of this structure. So we have this kind of 1, 2, 3, and then we tap into the base of the structure, which may be where price taps into for that longer term move to the upside to give us that 1, 2, 3 wave move. Okay. But as we drill down, you can see, I'm going to have to do this quickly because I'm running out of time. So in this instance, we've kind of already tapped into this significant low here, right? Versus where on pound dollar we didn't, right? So these trades are always more probable when we've near missed an area versus when we've already tapped into it. But what price may be coming down to do is just give us a double bottom before that longer term move to the upside. So that's partly why this is last on the list. You can see that we've had this 1, 2, 3 wave move, which taps into this exchange of liquidity here. We have that middle section here, 1, 2, 3 wave completed middle section, and you can see that we're stalling in that area where I would be looking for that move to the downside. If we just measure the impulses as well within the structure. Okay, so I'm measuring the impulse correction continuation within the structure. That gives me a clue that this is completed because this move up is of a similar length to this. Okay, so this impulse correction continuation, and we're stalling in that area, which gives me a clue that a move to the downside may be imminent. So with all that being said, and being mindful of the fact that I have about a minute left of this video, what I'll be looking for today is most likely a break below this low now, followed by a flag, because this could be the formation of a bull flag to push higher, where basically this low acts as the base of the flag to push higher. So rather than trying to short this and getting caught up in that, I'll be looking for price to break below and form a continuation, form a correction afterwards. Because if we break below that low, then that negates the possibility of this becoming a bull flag to push higher. And then I would look to get short on the break of that flag or within it. And of course, if we keep pushing up, then there would be nothing that I'd be interested in by the end of the day, because in this instance, the middle section doesn't have as much depth. So compared to pound dollar. So if this keeps pushing to the upside, that is likely nothing to do with the volume that's built up in this middle section, and price is likely doing something other than what I've been anticipating. So that is my thought process on the fly, folks. I hope you've taken some value from this video, and of course I will update you if I place any trades in the next video. Thanks for watching. Have a great day, and I will speak to you again very, very soon.